implement a fixed share compensation plan. On January 1st, 2019, Pep & Company adopts a compensatory share plan for its 50 executives. The plan allows each executive to purchase 200 shares of its $2 par common stock for $30 per share after completing a 3-year service period. Pepin estimates that the value of each option will be $14 on the grant date. The company expects that 15% of options will be forfeited and use this rate as in its compensation cost calculations in 2019. At the end of 2021, Pepin determined that the actual turnover was 7 executives for the entire service period. On January 6, 2022, 8 executives exercised their options. Prepare a schedule of Pepin's compensation computations for its compensatory share option plan for 2019 through 2021. And I just listed 2019, 20, and 21 here. And we'll put our labels over on the side. So we're going to start with our estimated total compensation cost. And we can calculate that as being equal to the $14 value. So they estimated the value of each option to be 14 on the grant date. So 14 times, and then we have 200 shares times 50 executives times 0.85, because we're expecting 15% to be forfeited, which would leave 85% to be claimed. Now we can press enter, and we get 119,000. So then we want to look at the fraction of service period expired. And this is 1 out of 3 service periods. And so that will give us the estimated compensation expense to date. And I put this row as a text so that we could see 1 out of 3. So a cell reference won't work, so I'll just have to type it times 0.333333. And I get 39,667. Previously recognized comp expense in this case is 0. And so we have the current comp expense of our estimated minus previously, and so it's at 39,667. For 2020, this really just stays the same, so we can just copy that over. Now 2 out of 3 years have expired, so the estimated compensation expense would be 119 times 2/3, or 0.666667. And the previously recognized expense we obviously have right here. We can drag this formula over. And so the 7933 minus our 39,667 gives us 39,666, or 67. So now on 2021, it's just ever so slightly different because we know what actual turnover was here. So now it's different because we're going to say it's equal to the 14 value times 200 shares times 43 or 50 employees minus the 7 that forfeited, and we get 120,400. And this is the 3rd year, which means that it's the estimated compensation expense to date is equal to our 120. Our previously recognized is our first period plus last period. And so that gives us a current comp expense of $41,067. So you can see it's consistent for 2019 and 20, and then 2021 it's greater because only 7 executives forfeited, and they expected a little bit more than that because they're expecting 15%. So, well, I guess 7.5 executives. All right, so now we get down to the preparing the journal entries for 2019 through 22 in regards to this plan. And so on January 1st, 2019, there's not a journal entry, but there is a memorandum entry that's explaining that we granted the compensatory share options to 50 executives, blah, 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 filling in about this other information that's up here that's expected. Then on December 31st, 2019, we can record this actual compensation expense. So we'll debit compensation expense and credit paid in from share options for this $39,000 that we're just pulling down for 2019. Then on December 31st, 2020, we'd have the same entry altogether, just coming from 2020 instead. Then December 31st, 2021, we can copy our accounts down, and we calculated $41,067 this time. And so now we've allocated the expense of this share plan across the 3 years. So that's been taken care of. And then on January 6th, we have the 8 executives that exercise their options. Just quickly refresh ourselves with the information. So they have 200 shares, $2 par common stock for 30 per share after the 3 years. So we'll come down January 6, 2022, and we're receiving cash because those executives are now completing the purchase of these shares. And so that will be equal to the 8 executives times the 200 shares times the $30 per share. Then we're also going to debit paid in capital from share options for the $14 times the 8 executives times their 200 shares apiece for $20,400. Then we also have to credit common stock and our additional paid in capital on common stock. And so the common stock was only $2 par, so our 8 executives times their 200 shares apiece times the $2 par. That gives us $3,200. We have the additional paid in capital on common stock, and so we can just slide in the difference here, and we get $67,200.